Hey guys, I'm going to continue on with our teaching series about pattern recognition. Go ahead and like and subscribe to this. Also join the Patreon. Mo's Muscles is the middle tier on our Patreon page. You can find that description in the link. Sign up. I'm in there talking trading all day, every day. Ask me whatever questions you have. Ask me individual stocks. I'll record short videos and put them in there for teaching purposes. So let's get started here with, this is a pattern where we're going to be looking at a change in direction. Actually, one of the patrons asked me about this today. We're looking for a tweezer pattern coming up on one of his stocks. So this is what they are. And it's just like it sounds. It literally looks like a pair of tweezers with some long wicks coming out of a candlestick. These indicate changes in direction almost every time that you see them. You can see in this chart that there's a lot of these tweezer patterns that are happening and then followed by a decline in the stock price. So this, along with trend, will show you something, but once you start seeing these tweezer patterns, especially on a weekly or a daily chart, you're going to see some kind of change in direction. So this is something that you're going to want to keep an eye on. This is another one where you're just going to have to flip through a lot of charts and start seeing it and recognizing it. It's not something that's just going to stand out to you the first time that you see this. This is going to be something that you're going to need to look at probably hundreds of charts before you start saying, okay, there's a tweezer pattern there, there's a tweezer pattern there. I actually just noticed something on this chart. This stock turned into a short. This is a little side note. This stock turned into a short. That I'm sure the trend on this was going in the down direction. You actually had a tweezer pattern here in the other direction, and the stock price started moving up on you. So tweezers go in both directions, but for the purposes of this video, we are going long on stock, so look for tweezers when candlesticks are green. Next one are sharp arrows. You're not going to hear many people talk about this one. This is just something that I noticed, and it has helped me out over time. So what I noticed were, instead of getting peaks of continuous days in a row, kind of like with that roundness pattern at the top, I started seeing ones that were very sharp and pointy. So you kind of go to the top and just shoot back down. And this means that the volume just falls away. And that's why you get that quick change in direction. So ideally, what you would like to see is some roundness to these peaks instead of just an up and a down. So when you start getting some big sharp peaks like this, you can pretty much tell that there's going to be some kind of quick change in direction, just because the volume quickly changed instead of it gradually over a couple of days declining. It just declined that day. You'll probably start to see these on a lot of smaller companies, tech companies probably as well, but you can see after each sharp peak, you got a big fall. Big sharp peak, fall. Sharp peak, fall, and so on and so forth. So these are just something to look for. You're not going to hear about these. It's just a pattern that I have kind of picked up on over my years of trading. So maybe it'll help you guys out a little bit. These are very difficult to recognize with, admittedly, I miss them just because it's not something that I look for on a daily basis. But when you do see them, especially when there is a couple of them in a row, it's something that you'll pick up on. And this is the S&P. So this happened back in March, April, when we had the big plague stuff happening. So this is, it can happen with S&P. If there's one thing that I teach you guys, this is one of the most important things. It's the 50% rule. And you're going to see this so frequently in today's market. It's going to save you so much money and headache from stocks getting up to a certain point and falling apart. You say, why did it fall apart? The news is not that bad, this and that. There is a big reason of why this happens. The 50% rule is you take your high of a stock, you take your low of a stock, and you take about the middle. When a stock falls, like this one did, and falls all the way down, it tries to get up to about 50% of its peak. The peak is right here, or of its previous high. So it fights to get up there, falls. This was the big fall back in March and April. Again, tries to get up, falls. Tries to get up again, falls. So the 50% rule is it's trying to get halfway up to its previous high, and it just kind of hits a large resistance line right there and just falls apart. So what is the name for all of this black up here? And that is called overhang. So when you zoom out, you're going to have to zoom out to about a year or more on these kind of stocks and just kind of look at them and say, man, it doesn't look like it can get past that part, those previous highs. Look at your 50%, and there it is. You have all this overhang, and I look at it as kind of like a big gray cloud that's just overhanging over the stock. It won't allow you to get through that level. Overhang is a real thing. You see it a lot in this market. This is something that you really need to zoom out on, look at a year and say, do I have 50%? This happened quite often on Boeing earlier this year. I'm not sure if it's doing it currently, but Boeing was a big one. It couldn't break through its resistance level of, I think it was 250, something like that. It would just hit that 250, 230, 240 level, bounce right back down. Same thing, hit it again, come back down. And that's because there was just so much resistance there, and it kind of set that bar that it wouldn't let it break through that level without a ton of volume and a ton of energy and all the big hedge funds and everybody dumping billions, if not trillions of dollars into that stock. So that's overhang. The big thing is you got to have a lot of volume to get through it. Eventually they will get through, but this is a good way of looking at something and saying, okay, I can take a step back and say I'm going to take my profits at this level and see what happens from here to reduce your losses. So that's it for this video. These are 3 important things. The 50% rule is the most important one, especially in an environment like today. So again, join our Patreon, join the Mo's Muscles level, $25 level, and we'll talk about charting, trading. You can ask me about any of these rules or patterns that we see, and we will move on from there.